This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices quite a bit higher this morning. A couple of reasons for this. For one thing, we are seeing what appears to be a better tone to the Greek European Union debt situation. Now starting to look like Greece is willing to accept some type of restructuring of their debt rather than what they had called for earlier, which was some type of forgiveness. So it looks like there may be some type of an agreement reached between Greece and the European Union. So that's supportive to stock indices. Also, we have the Reserve Bank of Australia joining the ranks of central banks this year that have eased credit conditions. So for those two reasons, we did see strength developing in stock indices. Also, only a limited setback in the indices when factory orders this morning came in weaker than expected here in the U.S. With futures being supported by the overnight news and responding well to negative news, that suggests that we will see further gains today in the indices. Still thinking longer term that there is a lot left to the upside for stock index futures. Overnight currencies, with a better situation in Greece, we are seeing some flight to quality longs being liquidated in the dollar index and the yen. And for the very same reason, we are seeing gains in the Eurozone currency and also the Swiss franc to some degree being pulled up by gains in the euro currency. Longer term, though, we feel that interest rate differentials will support the dollar. Still looking for lower prices longer term in the Japanese yen, as the Bank of Japan is likely to add more stimulus to their economy over the next couple of meetings. And the Reserve Bank of Australia, as we mentioned, cutting rates by 25 basis points, taking their key rate now to a record low of 2.25%. So that putting a lot of pressure on the Australian dollar. We continue to believe that there is further downside potential in the currency of Australia. Over in the credit markets, lower prices for the most part, with long liquidation taking place at the long end, which we think is mainly flight to quality, long liquidation. I think another point or so lower in the 30-year bonds would present a buying opportunity. Still thinking longer term that the Fed will be forced to delay a rate increase, even though the consensus view is calling for the Fed funds to be increased possibly in October. Our feeling is maybe not until next year. In any event, still thinking that we are in a bull market in the treasuries, especially for the 30-year bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.